Morning, everybody. I want to give you two stories about two really brilliant men and the difference between disaster and complete success in your investing. The first one was Isaac Newton. Isaac Newton is arguably one of the greatest scientific minds of all time. But he was still human, and he was an early investor in a stock that was the greatest investment of the time, the South Sea Company, which effectively had a monopoly in trading. So when Isaac Newton invested in it, he made almost 100% on his money in a very short period of time. So many people were clamoring just to buy this stock that the prices just kept going up and up and up. And at some point, Isaac Newton said, "This doesn't seem right," and he sold. But that's only one problem, because the shares of the South Sea Company just kept going up. And all of Isaac Newton's friends who didn't sell were getting very rich. So against his better judgment, Isaac Newton went back in and repurchased the shares at nearly 3 times the original price. Soon thereafter, the market collapsed and he lost almost all of his savings.
We were down to one. And
it's gone.
To which his only response was, "I can calculate the movement of stars, but not the madness of men." Now I'll give you a story of another brilliant mind, Jesse Livermore. Jesse Livermore made so much money, he made close to the equivalent of $1.4 billion today. But he was also the master at losing money. And when he finally wrote the book on investing, which has become an investment classic, his perhaps most important observation of all the investments that he had done and all the people that he had known, his total experience came down to this single point on how he made the most amount of money. And I'll quote it. "After spending years on Wall Street and making and losing millions of dollars, I want to tell you this. It was never my thinking that made big money for me. It was always my sitting. Sitting as in doing nothing. As in not chasing after bubbles, not acting like a momentum monkey, not going against your better judgment, not going along with the trends of the day, but sitting." And that's what I'm doing with silver. I'm sitting. And I have been sitting for quite a while, and I plan on sitting for even longer. Because I know at the end of the day that this whole world is built off of an immoral, unsustainable, debt and death paradigm. One in which has encompassed the entire globe, is generational, and is ultimately a cancer on our humanity. I believe at some point the music will stop, and all digital illusions of wealth will come crashing down to their intrinsic value, which is zero. Even real things like real estate are a horrible investment because their values are propped up by artificially low interest rates, 30-year mortgages, a seemingly thriving consumer economy that's all based off of debt. And when that ends, it'll end horribly, just like it almost did in 2008. Unlike 2008, where it was a local, corporate, and some say institutional problem, none of the bad debts, bets, or people who made them went away. They were simply bailed out by the larger powers in this world, the sovereign nations and central banks. Nothing was reformed, nobody went to jail, none of the bad debts were even written off. They sit on central bank balance sheets. There was no reform in the system, so we'll see this exact same things come back over and over again. But now, unlike 2008, it's a global, it's a generational, it's a systemic, it's a sovereign nation problem, it's a currency problem. In 2008, it was smart to hold cash and wait for assets to go down to go in and buy them again. The next financial crisis will be cash, because central banks and governments will be forced to print trillions upon trillions of dollars more, far in excess of what we saw in 2008, just to keep the system going. That in itself will destroy the currency that all assets are made in, bail out the rich, and bring untold pain to all those who don't know what's going on. Silver stands in stark contrast, and it sits there. It waits. It doesn't matter how many trillions of dollars are printed, it waits. And that's what I'm encouraging you guys to do today. Stack and wait. You know what's coming. Don't get caught into these digital illusions of wealth or the traps that are being laid and to keep you from your destiny. I'll leave you with one last quote, and it's from Charles Mackay from 1841, The Extraordinary Popular Delusions and the Madness of Crowds. In it, he said, "Every age has its particular folly, some scheme, project, or fantasy, into which plunges, spurred on by the love of gain and the necessity of excitement or the force of intimidation. Men, it is well said, think in herds, and will be seen that they go mad in herds, while they only recover their senses slowly and one by one." I hope this message resonates with you. I've committed myself to this. I'm one of the few individuals that has aligned his passion and his career into something that I think is meaningful. Every week, as you know, I release a new mini mintage, a design that's only made for 1 week only, which creates instant collector's pieces due to their mini mintage. Each one of them comes with a unique certificate of authenticity. This week we have our third of the Disobey series, Alexander Solzhenitsyn, and it'll be available until Monday at noon, in which we'll come out with our next design, which is the Debt and Death version 4, which is our Jamie Dimon skull and Debt and Death They Still Trust on Monday. So if this message resonates with you, this is a great way of stacking on a consistent basis and sitting and waiting. And in the meantime, you'll have silver that goes up in value over and above the manipulated paper price of silver because they are instant collectors and are worth instantly more than what you pay for them. And we have a strong track record on eBay. And if not, you got something that you pass down to the kids, and it is a meaningful, real, tangible wealth that I can think of no better thing to leave to your children. Thank you.